Hello, everyone. My name is Nate Zielinski. I'm from RCN Capital. I'm happy to be here today. As you can see on the screen, my title is Senior Partnerships Coordinator. So I work closely with AIME. Hopefully, we're on the same page here, just trying to help brokers as best we can, give them all the education, tools to succeed in the industry. And today, this presentation is hopefully just another example of that. We're going to get right into it, mastering specialty loans in the real estate investment space. We've got some data, some graphs, some trends to kind of go over here in the beginning to set the table of what we're going to talk about, and then we'll get into exactly how RCN can help you as a broker going forward, closing more loans in the investment space. So, without further ado, let's get started here. So slide one, I like starting here. This is a great graph that kind of shows, there's a need for brokers in the real estate investment space. As you can see, from 2001 to 2021, so the last 2 decades here, the interest in people investing in real estate has grown exponentially, quadrupled, if you will, a little bit over around 5-6%. And then throughout the course of 2021 and even into 2022, it's risen above 20% in a given quarter. So, investors are flooding to the space. Nearly 1 in 5 of all homes sold in the U.S., are purchased by those real estate investors. So for you to come in as a broker, there's definitely a need for you in the space to kind of help these investors, steer through difficult times in the industry, whatever the case may be, different strategies, things of that nature. There are a need for brokers. Don't think, switching over to the investment side could be seen as a risk potentially to some brokers. This slide here in this graph, particularly, we try to nip that in the butt and say, there's definitely investors out there that could utilize a serious broker, an educated broker, somebody that can help them navigate through the course of the loan. They are definitely flooding to the space, interested in buying up properties and using them as investments for passive income. So moving on, there's definitely some tremendous opportunity in the space. We kind of went over the investor side, and this slide is more based on the property types themselves. So single family, 2 to 4 unit, and multifamily, that's kind of denoted as anything 5+ unit in the real estate investment industry. So as you can see here, some numbers: 36% of all households in the U.S. are rented. That's a pretty substantial number as well, considering there's over, right around 121, 122 million households in the country. RCN Capital provides loans for the first 3 property types here. We do not offer anything on, the mobile home side or the commercial space side, your restaurants and warehouses, things of that nature. But, for the actual livable properties that are in the United States, 96% of those, RCN Capital has a loan program fleshed out for just exactly that. So we're in a good position to help investors in the space, and as well as brokers kind of facilitate those loans. There's ways that brokers can promote RCN Capital's loan program specifically. We'll get into that a bit later. But as you can see, there's plenty of opportunity and plenty of houses, either on the market for rent or the fix and flip or purchase and rehab style of, getting an investor getting their hands on a property, doing some renovation and flipping that. Brokers and us as the private lender can always be there to help those investors secure those properties. So we kind of took a look at the last 2 decades on that first slide. The next 2 decades, that is, there are still some great projections. 9.3 million net new renter households. So that's over a 20% increase. Those numbers are even a little bit conservative. So no matter how you look at it, there's definitely going to be some new properties that flood the market. And with that, there's going to be more renters and more investors looking for those properties. So as a broker, you put yourself in a great position if you move off, or just, you don't have to move completely away from the conventional lending of having clients out there that are looking to buy their primary residence, set up their dream home, find that nice neighborhood. On the flip side, there's so many people flooding to the real estate investment space, looking for those properties to secure long-term rentals for passive income, for wealth that'll, benefit them for hopefully in their families for generations. So absolutely no shortage of properties. and investors going to the market. Now, I do realize this is a rather rosy picture of the investment space. The past year has been a little bit troubling, as I'm sure most of you, if not all of you, are aware of the rise in interest rates, the near recession, and kind of the spiral that's put the real estate industry in. But these are just short-term blips. I try to provide some insight there as to, there is some opportunity in the future. But here's how you navigate the tumultuous time that we've had throughout 2022 with the rise in interest rates. So with this screen, we're looking at home prices of existing homes throughout the country. A lot of people would think that home prices have gone down due to the rise in interest rates, but there actually are markets experiencing some appreciation. In the Midwest and the South specifically, you have a 5% increase in the Midwest, and then the South at 2.7. So the Northeast got hit pretty hard. The West, California probably makes up most of that with, their real estate market being colossal, but they've seen a massive dip at 5.6. So with these home prices and the knowledge that the overall outlook might be negative regarding the entire country, but there are little pockets where there's still appreciation, where investors can get their hands on properties that will still appreciate in value even through the toughest of times. There's not going to be a harder year for a real estate investor than in 2022 and in the early stages of 2023. But as you can see, there's still opportunity to make a profit, to find home values that will appreciate, that will endure. And this is a chance to kind of spread your wings, work in different parts of the country. Maybe you're a broker located in the Northeast, and you have investors that are struggling to find properties that they really want to, get their hands on in the Massachusetts, Connecticut, New York area. Maybe take a look at properties in the South. Maybe take a look at some properties in the Midwest. This is a chance for you as a broker to have a coachable moment where, investors don't have to think so localized. They can branch out, go throughout the country, find investment properties that work for them. Yes, that might require a little bit of legwork with travel or hiring a property management company to oversee a property that you can't readily get to. But still, there's opportunity all across the country, even though the mainstream media has kind of painted a negative picture of what 2022 looked like. There is still a lot of opportunity for success. So for rates and what they impacted, the rise in interest rates, the biggest key here, or the biggest factor that was impacted was affordability. So with this graph, I'll just go through a couple numbers here to kind of help make sense of it. But again, this is all with keeping in mind that brokers can train their investor clients. They don't just have to work for them when they have a deal teed up. You as a broker can become much more valuable if you're training your investor clients rather than just talking to them when they have a deal that they can send your way. So when interest rates were much lower, affordability was obviously higher with what that monthly payment would look like. So for the column there in yellow, we'll take that as a prime example. For people that, when the interest rates were below 3, which for a time they were there and everybody was taking advantage of that, you could afford, your investor clients could afford a property at a much higher clip, right around $350,000. And that monthly interest payment was below $1,500. Now, as we move to what rates currently are, you're going to see mostly interest rates in the low 6s. Some lenders have gotten down to the high 5s. They've oscillated between the high 5s and the low 6s, but we'll take that 6.25% interest rate number. And as you can see, the affordability has dipped a bit down to $250,000 if you want to keep that monthly interest payment the same. So for brokers, you can step in here and say, as an investor, you may not be getting the same properties, but there are still properties out there where you can cash flow at a good clip. The monthly payment, won't be too much, and take away from that profit on the back end. You're going to have to start looking at houses in a different pricing range, but there's still that opportunity there to make money on investment properties. So for inventory in 2023, we're starting to see it slowly come back. Throughout the course of 2022, inventory was definitely at a historically low clip. You had houses on the market that were even being taken off. People were not wanting to put their house on the market because nobody was buying. Uh, the home prices across the country, as we saw a few slides earlier, definitely took a hit depending on what market you were in. So nobody was wanting to put their house on the market for inventory. Transitioning into 2023, however, we're starting to see that a month over month, there already has been a slight increase. Interest rates are not going up anymore. If anything, they're starting to decline or they're staying right where they are. So a lot of people are feeling much more comfortable with putting their house on the market. This is a huge aspect to relay to your investor clients because as more houses go on the market, obviously there's going to be a swarm of people trying to buy those properties. Whether those are other investors or primary home buyers, you want to be ahead of that curve. It's already starting to happen, but you as brokers can train your clients to be ahead of that curve, get their hands on that inventory because it's going to happen fast. When the inventory comes back, there's a lot more competition that comes along with that. We also saw days on market be affected because of the rise in interest rates. There's more incentive to hold properties as rentals in 2023 rather than to try to sell quickly. There's less competition for purchases to build out a portfolio. So, all of these things are key aspects for your investor clients. With the less competition, you want to buy up those properties. Once they have them in their portfolio, interest rates are not going to stay this high for this long. So being able to have investor clients that are in a prime position to refinance 3 to 5 years down the road, whatever that number may be for interest rates to go back to, hopefully the mid threes, the low fours. If you have an investor client that has a bunch of properties that they bought up in 2023, they held on to as rental income, they gained that passive income over the course of the next handful of years. When they refinance, when the rates are much lower, the monthly payments are going to plummet. The interest rate will be lower, as I mentioned, and they'll be making so much more money on those rental income properties. Once the income or the monthly payment goes down, the back end where they're charging for rent, that just allows their profit to skyrocket. So for you as a broker, knowing all of this information, investors heading to the market, a lot of people being skittish right now, not wanting to buy properties, and where they could potentially be in a few years when rates go down, now is the time to buy for your investor clients. Get their hands on some properties, wait it out until rates get better, and then reap the rewards with you as a broker and them as your client a few years down the road. So for why you should choose private lending as an outlet, as a resource for securing these properties. As a private entity, RCN Capital can provide loans for borrowers for real estate transaction. Essentially, that's what a private lender is. Now, we also offer flexible guidelines that differ from conventional lending with programs specifically tailored to investors' needs. Yes, you can go to a conventional bank, or yes, you can find a non-QM loan for an investment property. This is true. But when you're talking about private lending, that's where we come in for scalability and for always being there for your investor client. When banks get timid and want to stay away, they see an investor taking on way too much debt, potentially securing their fifth or sixth investment property of the year. Banks take a step back and see that as a risky investor. As for a private lender, we see somebody that takes this profession very seriously. It's probably their only source of income, and they're extremely determined to make the most out of these investment properties. As long as they can back up a couple months of bank statements and prove that they've been making their interest payments, that's a client that RCN Capital wants to help out. The documentation requirements are much less. We have a streamlined process that lends itself to repeat business. And we also have broker-specific resources that benefit all parties involved. So not only can these resources help you on a daily basis, they can also help you close more loans, have a stronger relationship with your investor clients, and everybody wins when we have repeat business. The lender is in a good spot to take advantage of an investor that's very savvy. The broker can make money in commission off of all those loans, and the investor can, charge full steam ahead, getting all the properties that they want because there's no hesitation from the lending source that they are partnered with. So, a little bit about RCN Capital as a company, why and how we can help you as a broker succeed going forward. We're a national direct private lender, started in 2010. Fun fact, we actually celebrated our 13th birthday last week in our office in Connecticut. We also have an office down in Charlotte and one on the West Coast out in LA. With this blanket covered, in the Northeast, the Southeast, and out West, we feel like we can offer an extremely high level of customer service for brokers and their investor clients alike. Usually somebody will be diligently working at their desk, no matter the time zone, to help you if you have an urgent question, need to close a loan quickly, or anything of that nature. RCN Capital has it covered. We are a leader in the industry for fix and flip and long-term rental loans. We have access to multiple sources of capital. This is a fancy way of just saying essentially that RCN Capital is ready to fund deals. We're not looking to turn anybody away as long as they qualify in accordance with our guidelines. We're looking to get that deal closed. We funded our 20,000th transaction in 2023 as well. We have originated close to $4 billion in total loan amount, and we also have common sense underwriting. Now, I saved this for last because this definitely allows us to have a certain level of flexibility. With an in-house treasury team, not only can we make exceptions to our current guidelines, but we can change our existing guidelines at a much faster pace. If we're reacting to market trends or foresee something coming in the next few months, we'll change our guidelines. We'll be able to adapt. And again, it all goes back to tailoring our loan programs and our guidelines to investor needs. So any client that you have as a broker, RCN Capital is diligently working to make sure that we have a loan program that's perfect for them. Never hesitate to ask us any questions, send any potential leads or deals our way, because there's a great chance that we have a loan program for your client. And not only that, but we can specifically tailor any loan to make sure that the investor closes the loan, is in a great place going forward, and they're extremely happy with how the process went. I mentioned we're a nationwide private lender. So that puts us in 45 states across the US. The 5 states that we do not lend in are Alaska, Nevada, North and South Dakota, as well as Vermont. A lot of this has to do with properties in this area being designated as rural, as RCN Capital can only lend in areas that are designated as suburban or urban per an appraisal. There's also property values that come into play, things of that nature, property type. We would love to be lending in Nevada. We go to Nevada a lot in Las Vegas for trade shows, but Nevada makes it almost impossible to be set up as a private lender in their state. But we do cover, a wide range of states. We hit all the big markets, including California, Texas, Florida, up along the East Coast and into New York. Out in the Midwest, you have states like Illinois with markets like Chicago, Ohio, Pennsylvania. All of those states are ripe for the picking when it comes to investment properties. So with the 45 states that we do lend in, we cover a wide net and offer a great deal of customer service. Moving on to what RCN loans can be used for. So this is kind of getting into that specialty loan category. We're going to be looking for purchases, which are tied to your long-term rentals, purchase and rehab, which is also known as the fix and flip. There's also rate term refinances, which I covered in the beginning. If you have a client that has a previous loan and they're just not in love with that interest rate, they're always shopping for that next best deal. The rate term refinance is a great option and will be a great option in the near future when rates go back down. Investors have properties, they're looking to refinance, they're looking around, and you as a broker say, aha, I've got just the lender for you. Let's see if we can send this deal over to RCN Capital, get you that lower rate, make you much happier with the loan going forward, and the mortgage payments going forward. Everybody's set up for success. Everybody walks away happy. The last loan type that we have is called a cash out refinance. This is also gaining a lot of popularity throughout the past couple of years. What a cash out refinance is it allows investors to take out the equity in their existing property. Now, granted, they do have to pay off the existing loan. Sometimes these investors own the property free and clear, which is absolutely great. But if there's an existing lien or an existing mortgage on the property, the cash out refinance allows them to take out the equity, pay off the existing loan, and then leave with whatever money is left over. They have a nice chunk of change to move on to their next investment property. So that's a great way for investors and your clients to kind of restructure their loans, take out some money, and get another property to boot. The cash out refinance is a great tool used by many savvy investors. The property types are listed here along the bottom. We have 1 to 4 units, condos, townhomes, as well as 5+ units. As I mentioned, those are noted as multifamily properties. We have 50K to 2 million for the property values on those 1 to 4 units, condos, and townhomes, and 250K to 3 million for any multifamily properties. I bring these up because this is a great example of RCN Capital being able to use our guidelines, use our treasury team, and to be able to make some exceptions. Just because you have a single family home that's worth $2.7 million, or your client has a $2.7 million investment property, this does not mean that RCN will not be able to move forward with that loan. Always reach out to us, see if we can make that exception. If the client has experience, dealing with property types of this nature, or the market itself dictates it sometimes in California and Florida, those prices just can skyrocket pretty quickly in regards to the rest of the country. So, we're always looking to make deals depending on the market, depending on your client and, their FICO score, their investment history, things of that nature. We'll always take a look. Same thing can be said for the multifamily properties. If they have a property that's worth $4 million, they're looking to get some rehab work done and be able to sell that property for $5 million. As long as they can show a clear-cut history of operating in that market, dealing with property sizes of that caliber, and being able to complete those transactions successfully, our treasury team will have no problem moving forward, approving that deal, and making your client a happy one. The last 2 boxes here are extremely important when dealing with RCN Capital. This kind of lends itself to the specialty loans as well. We are looking for non-owner occupied investment properties. So these are going to be residential properties that are long-term rentals, fix and flip deals. There's absolutely no partial occupancy allowed when dealing with RCN Capital. A lot of times we have people that will come to us for a long-term rental, and they'll say, hey, I want to rent this out for 11 months of the year, but during August, it would be a perfect vacation home for our family. Is that something that RCN Capital can do? The answer is a definitive no. No partial occupancy comes into play as well when, I'm living in this house while I'm doing renovations. Some nights I'll be sleeping in the property, but once the property's sold, I'm obviously going to move out. Also something that we can't do for your investor clients. So non-owner occupied and no partial occupancy are 2 of the big boxes here on the screen. It's why I save them for last, because they are the most important. RCN Capital will violate their lending guidelines. We will cease to be able to do business. If we even get wind of that there's even a thought of, owner occupied or partial occupancy, we will have to walk away from the deal. But for how you get paid as a broker, an important slide for you, I'm sure. Our standard at RCN Capital is to split points. The maximum on any deal that we can do is 5 points at closing. We've definitely moved away from this. I think RCN Capital has realized, with the market dictating what it is right now, and there's a shift obviously going on. We want brokers to be in a position where they can actually close loans for their clients. RCN Capital has sacrificed their points moving into 2023. We try to keep the broker whole. We try to keep the broker compensated for the work that they put in. A lot of the deals that I price out are typically the broker at 2 points and RCN Capital at anywhere from 0.75 to 1.25 points. So there's a lot of flexibility that goes on when we're talking about points paid at closing. It can greatly impact the closing costs that your client has to pay. So if there's ever any pushback from you as the broker or your client specifically, we can always rework term sheets. We can always get you a different quote that's kind of a little bit easier on the eyes for your client, so to speak. That's where you can choose your level of cooperation. As I mentioned, RCN Capital is always going to be in the driver's seat when it comes to sacrificing points paid at closing. Again, we want the broker to be compensated. We want them to, make the proper amount of money for the work that they do put in. But if there's ever pushback, sometimes the broker has to sacrifice as well. The broker will get paid when the deal closes via check or wire transfer. Again, that is all up to the broker. But these conversations go on throughout the course of the loan closing. How can we get those closing costs down? What can we do about the points? Just have that open line of dialogue with RCN Capital as your preferred lender on these conversations. We're always going to work with the broker to try to make it the best deal possible so they can turn around, have confidence in the deal that they're sending to their client, and have a little bit of confidence that, this is a great deal. The client should take it. They can back that up because they know they're working with a lender that wants to make the deal as appealing as possible for all parties involved. So now we're going to go into some specific details about mastering these specialty loans. The purchase and rehab is first on the list. Again, I've mentioned this throughout the presentation so far, but this can also be called the fix and flip loan. It's very popular in the industry. We like referring to it as the purchase and rehab, though, because there are options that your client has. They don't always have to sell off the property if they get this loan. A lot of investors out there will secure a property through financing with a private lender. They'll get the renovation done. They'll be able to take advantage of that property now with this increased property value. They can increase the rents. They refinance the structure of the loan, and now they have a 30-year long-term rental property after doing the purchase and the rehab necessary on the front end. For these property types, again, we're looking at 1 to 4 family units, condos, townhomes, and 5+ units. Right now, our 5+ unit properties are typically, we're not going much higher than 15 units. Again, that is subject to change because of the adaptability we have with our guidelines. But for right now and what the market is dictating, we're really looking to zone in on 5 to 15 unit properties when it comes to these style of loans. We have 12-month terms available with extensions. Again, open line of dialogue is huge on that. If your client ever runs into issues, they can't get the proper materials, a natural disaster has come through and wiped out a significant chunk of their progress, there's always extensions available. RCN Capital wants to put your client's mind at ease and be able to help whenever necessary. We're lending up to 85% LTV right now, which means your client can come with a 15% down payment. RCN Capital can cover the rest if they qualify for that 80% LTV. And that takes a lot of the burden off of your investor client. They don't have to come to the table with that much money up front. It can save them for, money for renovations or, just have that more capital freed up. They don't have to have a lot of their budget locked into one property if they're only doing 15% down. We will cover 100% of the renovation cost through a reimbursement draw process. Now, what this means is your client will complete some rehab. RCN Capital will send out someone to that property, verify that the rehab was done, and then we'll release those rehab funds. So throughout the course of doing that a handful of times, your client can get fully reimbursed, and they do have to do the rehab work up front, but they can leave that deal after selling off that property without spending a dime on those renovation costs. They can be fully refunded for all the rehab work they do, and that's great. That puts the investor's mind at ease that, again, they're not going to be sapped with heavy rehab costs, or one property is kind of sinking their portfolio with the cash that it demands to get it renovated and back on the market. So that's a great tip and something that brokers can relay to their clients. If we go with this specific lender, they can cover 100% of the rehab for us. Our rates are starting at 10.25%. And lastly, there's no prepayment penalties. Again, this is huge for your potential investor clients. A lot of them, can be very savvy with years of experience. So if they're working through properties and they've completed the renovation in 4 months, they do not have to hold on to that property for the remaining 8 months for fear of getting a prepayment penalty or a fee charged to them. They can sell that property off as quickly as possible, make that profit, move on to the next one. So no prepayment penalties. You'll see a lot of potential investor clients' ears perk up when they hear that. That's definitely a huge selling point that RCN Capital can offer your potential clients. Moving on to rental loans. Again, as you can see, similar property types. We are a little bit more conservative on the 30-year long-term rental. We're looking at 5 to 9 unit properties on this one. Most of our loans are structured as fully amortized 30-year loans. We recommend that that's the direction that you and your client go, just to avoid any potential missteps down the road. But we do offer interest-only periods as well, 5, 7, or 10-year options on those IO periods. Again, anything we can do to kind of make the loan a little bit more appealing for your client, that'll definitely save them some money on the front end while they're paying those interest-only periods. There will be a balloon payment at the end of that, so they'll have to make up for that. But throughout the course of those first couple of years, again, their options are 5, 7, or 10. They can go with interest-only periods where they're making interest-only payments for that select amount of years. A little bit lower on the max LTV that we're offering on the 30-year, but still very good at 80% LTV. Our interest rates have dipped into the high fives, as you can see here. From the high fives to the low sixes is usually what I'm seeing when I'm pricing out 30-year long-term rental loans. And the prepayment penalties can be adjustable up to 5 years. So unlike the fix and flip, the purchase and rehab, those short-term loans, there are prepayment penalties on the long-term rentals. However, those are easily avoidable if you have a clear plan of attack with your client. So you can say, hey, as long as you hold on to this property for 5 years and a day, there's no prepayment penalties involved. We can adjust those to as little as 1 year. But again, there is going to be some interest rate, there's going to be a rise in interest rates that will affect your client. But again, they get away from that prepayment penalty earlier. Maybe that's what they're looking for rather than the lowest interest rate possible. So again, those are conversations that you can have with your client. If you have any questions, you reach out to RCN Capital. We'll give you the answer you're looking for, and you can relay that to your client to continue being an asset, a resource that they can rely on, a resource that they can trust. There won't be any misinformation involved. We never mind when a broker comes back to us with a question, they turn around and give that exact same answer to their client. That's exactly what we're here for. But for things that are going to affect pricing when it comes to these specialty loans, these investment property loans, on the short-term side, it's going to come down to experience. As I mentioned, with the 85% LTV on those purchase and rehab loans, as well as the interest rates as low as 10.25, experience can go a long way with getting your client the best terms possible. Somebody that has a 630 FICO score and 0 experience, their term sheet is going to look a lot different than somebody that has a 700 FICO score and 15 experience in the past 3 years when it comes to investing in residential real estate investment properties. Those two numbers are very different. The experience can be a great factor. So if you have somebody that's starting out, somebody that's brand new, say, hey, these first couple term sheets might not be exactly what we're looking for, but if we keep chipping away at this, if we keep working at it, and you keep securing these investment properties, the deals that you make are only going to get better and better. The loans that you're receiving are only going to get better and better. So that's a little bit of an incentive for those newer clients of yours. You can work together. You can build together with you as a broker, with RCN Capital as a lender, and your client looking for those properties on the ground. We can work together in unison to increase that investor's portfolio, and just term sheet by term sheet, loan by loan, they all get better. For the long-term loans, that's really where we're looking at FICO score. We never check for experience in the past 3 years when it comes to somebody that's looking for a long-term rental loan. But cash flow is also going to be a huge factor. So where's the property located? How much is your client going to be charging for rent? Is the investor taking full advantage of the property that they have, or are they leaving some cash on the table? That will all be reflected in the term sheet. I've seen a lot of great properties, high FICO scores, and the LTV will come back at around 70%, maybe even as low as 60%. That kind of lends us to starting to scratch our head. What's going on here? Usually the biggest factor is your potential client is not charging enough for rent. So we'll take a look at the market data. What are they leaving on the table? How much can we increase the rent where they'll still be able to find tenants? Uh, that's what we'll take a look at. So again, those are coaching moments that you can have as a broker. Your client as an investor will be coming back for more if you're always looking out for helping them. What can make this loan better? What can we do to improve the property? Things of that nature are huge when it comes to investor clients. They will always remember that and always come back to you for help when they have another deal. Points paid at closing is another part of the process that affects pricing. We talked about this as well when we discussed, brokers and how they get paid. The more points paid at closing, the higher the closing costs will be, and vice versa. So always keep that in the back of your mind as you're working through these deals. Whatever we can do to make the terms look a little bit better for your potential client, we'll try to do that. Ground up construction is another specialty loan type that we offer here at RCN Capital. The minimum after construction value does need to be $150,000. And this is the only time that RCN Capital will need to see experience. So yes, throughout the course of this presentation, some of you may have that question. Will RCN Capital work with brand new investors? If me as a broker finds someone as an investor that's just brand new to this industry, they're still looking for that first home, they're very green in the real estate investment space, we will still work with them. However, ground up construction is a whole different animal completely. It's a lot harder to get in. It's a lot harder to get into and a lot harder to complete a ground up construction project. So we are going to need to see that your client has one experience with completing a ground up construction as the builder themselves. They did not hire a general contractor. They did not hire a third-party builder. Your investor client themselves had to see from beginning to end a ground-up construction project. Just one, but we do need to see that. It puts our treasury team's mind at ease that they've gone through this process before. They know what to expect. They truly do know how difficult it is to complete ground-up construction, and they're willing to take on that challenge. That's why we want to see that one experience. The minimum FICO score here is 650. So at this time, I'll take this opportunity to go through all of our loan types and what the minimum FICO scores are going to be. As you can see on the screen, ground up construction comes in at 650. For a purchase and rehab or a fix and flip loan, we're going to want to see a minimum FICO score of 620. And then for the long-term rental, we're going to want to see that the FICO score comes in at 680. So that's kind of a sliding scale to keep in mind as you go through. You're looking for potential clients, and if they'll be a fit for RCN Capital, you can keep those FICO scores in mind. If you ever need a refresher, always reach out to RCN Capital. And as well, that's another opportunity where us as a private lender, we can change our guidelines whenever the market dictates. We'll always try to lower or raise our FICO score requirements as the market dictates. So those are subject to change. The long-term rental wasn't always as high as 680. That was a change that we definitely had to make going into 2020, kind of forecasting where the market would take us to be a little less risky with the loans that we're extending to clients. We raised our FICO score in that regard. So those are always changing, but as of right now, 620, 650, and 680 are the three big numbers to remember when sending deals to RCN Capital. We will fund 1 to 4 unit properties on the ground up construction level. We'll also do multifamily, but I will tell you now we're going to need to see a lot of previous experience when it comes to these multifamily properties. The treasury team is it's up to their interpretation of whether or not they think the client is prepared to complete this ground up construction. But any experience that you and your client can provide are a huge help because our treasury team is going to need to see it if it's going to be a multifamily ground up construction project. The loan term is up to 24 months on that, so it's a little bit longer than your typical 12-month purchase and rehab, and there are extensions available as well. Moving along here for getting approved on ground up construction loans, these are some things to keep in mind for you and for your client. RCN Capital is really going to look at the local neighborhood. Does this property reflect and conform? Is it going to stick out like a sore thumb and potentially hinder your client's investment portfolio? There's nothing worse than building a brand new ground up construction, beautiful multi-million-dollar home, but it's located in a market or in a neighborhood where the average property value is $400,000. That home is going to stay on the market for a long time. They're not going to attract the right potential buyer to that home, and the market rent is going to be skewed and way off. It's going to be really hard to secure somebody that, one, either wants to buy that property or rent it out if your client wants to make it a long-term rental. Things we look at are obviously going to be similar size in terms of square footage, room count, the style of the property, as well as the price point, as I mentioned. Things that won't get approved when it comes to ground up construction at RCN Capital include building a new block of a neighborhood, anything that can be considered a tract development. So this is where you're going to see dirt roads, no electricity, no plumbing yet from the local town or state that the property is located in. Things of that nature, again, are going to keep this property on the market for a long, long time. And that's something that we want to stay away from, not only for RCN Capital's sake, but for your client's sake as well, for the details I mentioned earlier. Having a property sap the rest of your portfolio, making monthly payments on a property that you're not getting any profit from, are huge negatives for your investor clients. So we keep that in mind. We won't offer loans on tract developments or areas that are unestablished when it comes to ground up construction. And then we have no experience, the non-conforming properties, and the FICO scores under 650 are automatic no's from RCN Capital. Again, when it comes to mastering specialty loans, there are a lot of things to remember that differentiate private lenders and their loan programs from conventional lending. The commonly required documents is a great example of that. Here you see on the screen just a brief list of pretty much what RCN Capital is looking for on every deal, much less intrusive than your conventional lending side. Loan application is extremely standard no matter where you go, conventional, private, non-QM, no matter the lender. Obviously, your client is going to need to fill out a loan application. 2 months of bank statements, though, is a huge difference than your conventional lending. Usually, they're going to want to dig up tax returns. They're going to want annual income statements, proof of employment, things of that nature that can really hinder your client from getting qualified and really slow up the loan process. Even if they do get qualified, these are just annoying things to track down that take a lot of time. 2 months of bank statements is essentially a snapshot. Can your client afford this loan right now? Based on what we see in their bank statements in the last 2 months, can they afford this loan? If the answer is yes, then we're good to proceed. No extraneous information needed. The purchase and sales agreement is a huge one. The rehab list, if it's going to be a purchase and rehab loan, obviously we're going to want to see what your client has in store for the property. What kind of work are they going to do? How much do they think it's going to cost? How many different rooms are going to be affected by this renovation project? These are all things that we're going to want to see up front. But, it's great to do the due diligence ahead of time, get this out of the way. It just helps the process move smoother the farther down the line you go. Credit score authorization is another big one. Up front, we'll do verbal credit scores to make sure that, these hard or soft credit pulls don't hinder your client's FICO score as they try to secure a real estate investment property. So we'll take the verbal score up front, but once a term sheet is agreed to by you and your client, loan officers at RCN Capital will take that as a sign to do that credit pull right away. We'll get that out of the way to make sure that the client is okay to proceed. Business entity docs. This is another aspect of the specialty loans coming into play. RCN Capital will only lend, not exclusively, but 99% of the time, we're lending to LLCs set up by your investor clients. We will not be lending to personal or individuals, rather. We're going to need to see an LLC set up, a C corporation, an S corporation, a trust, things of that nature. RCN Capital wants that buffer in place to protect your investor client from any worst case scenarios. So having that LLC set up, having it differentiated from an investor's personal life, their personal credit history, that is a huge positive for them. Having that LLC set up is a huge win for investors, not just for dealing with private lenders and RCN Capital specifically, But having an LLC set up where their investment properties can live is a huge buffer and a huge help for your potential clients. Leases, if it's going to be a 30-year long-term rental loan, we want to see the leases in place. How many units are leased? What's the vacancy rate looking like? What is the investor client doing to ensure that the property is going to be filled and completely rented out by the time the loan closes, or down the line? So the property is cash flowing. They're in a place for success. If they're looking for a 6-unit long-term rental loan, all the units are vacant, that's something where RCN Capital may have to take a step back. You as the broker may have to, urge them to try to find tenants. What's the market rent dictating? What can we get in here as soon as possible so the property starts cash flowing? Those are all teachable moments for brokers and their investor clients. And then lastly, here on the screen, the appraisal. This is usually, what takes the most time throughout the loan closing process. We get so many questions. Can you accept this appraisal? What about this one? Can you work with this company? Essentially, RCN Capital prefers to order their own appraisals. We have loan officers that are ordering appraisals every day. But if it's a trusted appraisal management company, a third party, and it's been performed within the last 120 days, RCN Capital can accept an appraisal that we did not order. So again, that's a huge potential clinching moment for your client. If they already have an appraisal done by a third party trusted AMC, the process can move much quicker. Say, oh, I have a lender that'll accept that appraisal. Maybe we can get better terms. The appraisal's already done. Now it's time to shop this deal around and see what we can get from any specific lender. RCN Capital will accept that appraisal if it's been done within the past 120 days. I spent a lot of time today talking about things that RCN Capital can do, types of loans that we can fund, properties that we are looking for. Here's a quick reminder about things that we will not do here at RCN Capital. Commercial properties are a big no. So we're a commercial lender due to the fact that we're going to be lending to LLCs, but the properties have to be strictly residential investment properties. Typically those 1 to 4 units, as I've harped on, that's really our sweet spot. Yes, we can close multifamily loans, but we're really looking at that 1 to 4 unit and zoning in on that. That's really our specialty, those 1 to 4 unit residential investment properties. We will not be able to fund vacant land. Your client can get reimbursed for a lot they purchased if it's going to be a ground up construction loan, but we are not here to fund deals with vacant land with no plan in place for your investor client to kind of proceed with that ground up construction, take advantage of that vacant land and turn it into an investment property. Just vacant land is a no for us. Property significantly under value requirements. So I have mentioned that we're able to make exceptions. If the property comes in a little bit lower than what we're looking for, always try to run it by us. We'll see if we can make that exception. But, again, I mentioned on those purchase and rehab loans, our minimum dollar amount is $50K. That's really what we're looking for. If there's a property that comes in, at $20K, $22K, somewhere along those lines, our treasury team will not be able to make that exception. That'll be an automatic no. Rural land, as I mentioned, suburban and urban only. This will be dictated by the appraisal that's ordered, but we'll be looking for suburban or urban designations. If it comes back as rural, RCN Capital cannot close that loan. Owner-occupied properties was a huge one. Felonies is definitely a no-no. And then there's foreclosures and bankruptcies. We look at those a little bit differently than felonies, but if the foreclosure and the bankruptcy has happened in the last 2 years, RCN Capital will not work with that borrower and your potential investor client. However, if that bankruptcy and foreclosure has happened outside of 2 years, RCN Capital will believe in second chances in that instance. We'll be able to work with you and your client if that bankruptcy or foreclosure has happened outside of 2 years. Again, going back to the theme of today's presentation, mastering specialty loans. This is a reason why you want to be on the lookout for private lenders such as RCN Capital. Self-employed borrowers are something that we don't worry about. When you're dealing with the conventional side, you're looking to get a loan from a bank for you and your client. Self-employed borrowers are not something that they're looking to extend a loan to. They're going to want to see proof of employment, income verification, things of that nature. A self-employed borrower for us just means that somebody that's serious about investing in real estate, this is their full-time job. This is what they care about. They're always on the lookout for their next property. They're always looking to refinance a loan or a mortgage that they do have in place for an investment property. Things of that nature come along with self-employed borrowers, so we do not worry about it. I've already mentioned the annual income in the tax returns, as well as the debt to income. Banks can take a step back. Non-QM lenders can take a step back when a potential client of yours is investing in a lot of properties throughout the course of the year or throughout the course of their career. That's when RCN gets excited. As I mentioned, that debt to income just means that they're actively looking for real estate investment properties. They're going to be able to make some payments, and they have a lot of cash flowing properties at their disposal, and that puts them in a good spot to refinance down the road. We definitely have loans where we can refinance entire portfolios, and really put your client in a great spot moving forward. And then lack of experience as well. There is going to be that caveat for the ground up construction where we're going to want to see one piece of experience. But for the most part, lack of experience does not come into play when you're talking about investing in residential investment properties. So now moving on to the tools that we can provide to help brokers. Bridge Loan Network is a software company that we partner with, and they have a really cool application plugin. It can be embedded directly onto your site, and it just gives brokers much more confidence. Really, the goal here is for brokers to have confidence in their website. Not every single loan that potential clients put into this application plugin go directly to RCN Capital. So you as a broker can kind of filter these deals. Do I want to send this one to RCN Capital? Do I want to send this one to another lender in my contact book? Things of that nature are all on the table. Again, it's just about brokers and having confidence in their website. The Bridge Loan Network application plugin is really cool. They also power the back-end software for all the document uploading, keeping tabs on the loan process, things of that nature, even pricing out your own quotes for your clients. Bridge Loan Network is at the crux of all of that, and they can actually give you a demo of their software. Every broker that registers with RCN Capital gets assigned a broker account manager from Bridge Loan Network, and you can take advantage of that demo, learn the software front to back, and really take advantage of everything that we have to offer at RCN Capital. White label marketing materials is the next thing we offer brokers that's very helpful for them moving forward. Essentially what it is RCN Capital's latest marketing package. We scrub off any relation to RCN Capital. We put the broker's name, their business name, any contact information that they want on there. We even try to match the color scheme to the best of our ability. So brokers can then go out, attract clients with RCN Capital's loan programs, but have their brokerage be the logo on there. So again, this is really something that's a tool for brokers to gain confidence, and it's a trickle down effect, right? So if you're more confident and you're sending out these potential loan programs to investor clients, they get more confident as well. Oh, I found the right broker to work with. They have everything, they're all set with the resources. They have one-stop shopping on their website with the application plugin. I can review all the loan programs that they offer through this PDF format. The investor client is in a great space mentally, and the broker has confidence because these tools can be provided. The House Hacker Rehab Budget Builder is something that's RCN Capital and proprietary to RCN Capital, rather. But as you can see here, it's got maps, pictures, graphs, charts. What the goal of the House Hacker Rehab Budget Builder is to put any investor's mind at ease. So if you have a brand new client, they're looking to secure their first purchase and rehab loan, have them sign up for the Rehab Budget Builder. Having this priced out down to a T within $1,000 of the entire rehab budget, it really can put your client's mind at ease going forward. Everything is out there laid out for them. It's very organized. It factors in local labor costs, local material costs, so they can definitely be put at ease with the accuracy of this tool. But again, this is a huge selling point if you have those new investor clients say, hey, I've got a lender that has a really cool tool. They're going to be able to help you throughout every step of this process. It's going to be very well organized. The project is going to seem much more doable when they're able to put their hands on the House Hacker Rehab Budget Builder. And then again here, one team as your direct point of contact. Throughout working with RCN Capital, you as a broker will always have multiple points of contact to reach out to. If somebody's not being responsive, if somebody's traveling for a trade show, if someone's out sick, you're always going to have backup contact information. You're never going to be left hanging. There's always somebody that's going to be able to step up, take your call, respond to your email, so your mind can be put at ease as a broker that there's always going to be somebody at RCN Capital that's willing to help. Moving on towards the end of our presentation here, mastering specialty loans is not always as easy as it may seem. Yes, we offer a lot of loan types for your specific clients, but for brokers to get a better idea of what we do on a day-to-day basis, what exactly we're offering, and what kind of clients we're looking for, the free training program called Amplify can be a huge resource for brokers. We offer different courses at various levels of expertise. The brokers can go in, learn at their own pace. It's a PowerPoint presentation format. There's some true or false questions, some multiple choice questions to make sure that the information is being retained by the brokers. But essentially, this goes back to just having brokers being as confident as possible. Say that you're very new to the private lending side, these specialty loan types, and you have somebody that keeps calling you, hey, I've got this purchase and rehab. I've got this potential fix and flip deal. I've got this really surefire long-term rental. But for whatever reason, a broker just may not be confident enough yet to take on that deal, be an asset for the investor client, and work with them from start to finish on that potential loan. That's why Amplify is put in place. You can come on here, click through a couple different training programs, and within a few hours, you're well versed on the potential loan type that your client is asking about. Now, instead of turning them away, you can become an asset for them, have any question answered, and even if they ask a tough question, you can always say, let me try to track that down, come back to Amplify, find that answer. Within 15, 20, 30 minutes, you have that answer for your client. Again, it looks like you kind of knew it all along or just had to track it down in some notes. But again, this is all about brokers being an asset for their potential clients, wanting those investor clients to come back and lending themselves to repeat business for you as the broker and for RCN Capital as the lender. If you would like access to this free training program, please email us at bisdev@rcncapital.com for that access. And we also offer live training as well. So now newly implemented every quarter, we have Amplify Live. Brokers that are registered through Amplify can sign up for Amplify Live. And what this is they can take advantage of the business development team live in person. So we put together a short presentation, and then the rest of the hour and a half is left wide open for Q&A. So as a broker, you can ask as many questions as you want in real time. We'll stay on the Amplify Live until the last question's been answered. And again, rather than just, the monotony of going through course by course, learning this at your own pace, you can really expedite the learning process through Amplify Live if you have questions that you want answered by one of the team members on the business development team at RCN Capital. As we finish up here, this is the complete team at RCN Capital. My manager, Stephen Ballard, coworker, Mitchell Zagrodnik, and myself, Nate Zielinski. We'll be happy to answer any questions that you have. We'll get you set up with our resources. We'll put you in contact with loan officers at RCN Capital, and we'll even price out any leads or potential deals that you have. Use this team as your resource. We are here to help brokers on a daily basis. That's pretty much our main goal. We come in, look at our emails, answer any phone calls. How can we help brokers today? How can we help them close more loans? How can we help them understand RCN Capital's processes and guidelines better? Things of that nature. We are very broker-centric here on the business development team. We always want to help. Never hesitate to reach out. We have some emails, some phone numbers here. And then at the top there, if you have one point of contact that you've been in touch with. And, we travel a lot on the road for trade shows, vacations, sick days, whatever the case may be. That bizdev at RCN Capital email is always the fail safe. If somebody's not being responsive, you can hit up this email and somebody will get back to you within the hour. I promise you. Anytime we see somebody reach out through bizdev and say, hey, for whatever reason, Steven, Mitchell, or Nate is not responding to my email, can I get somebody to help on this potential deal that I have? One of us will happily step in. So that's going to do it for me today. I hope this has been a fun crash course on mastering specialty loans in the real estate investment space. Again, never hesitate to reach out. We're here to answer any questions. I hope you guys have a great day, learned a lot, and we look forward to hearing from you soon.